Hi, this is Paula here at Payroll Matters in Ireland, and today I want to talk to you about a series of videos I put together in relation to marriage and taxation. The first in this series is marriage and taxation, changing your civil status to married on revenue. When you get married, it is important to tell revenue as soon as you can. There are two options to access the service through your revenue myAccount. Option 1, click on My Profile, select My Details, click on Edit in the Personal Details tab, select your new civil status as married from the drop-down menu, and provide all the relevant information as requested. Option 2, click on the Manage My Record tab, select Update Civil Status, select your new civil status as married from the drop-down menu, and provide all the relevant information as requested. You will need to give details of your own and your spouse's personal public services number, PPSN, and the date of your marriage. Both spouses must be registered for myAccount in order to verify the request. That's important. Your spouse or civil partner needs to log onto their own myAccount profile to confirm the request. Any other details required can be forwarded to Revenue on the tab Manage My Record on the Upload Supporting Documentation screen. It is worth noting that in the year of your marriage, you and your spouse will continue to be treated as single individuals in tax terms. However, you can apply for a rebate the following year for tax paid in the months following your marriage, if and where the tax paid, the liability, as two single individuals is greater than the liability as a married couple. Now, taxation after marriage. In the first year of marriage, you will continue to be taxed as two single people. If you are due a refund, it will only be given from the date of marriage. You can claim the refund of the difference. You must complete an income tax return after the preliminary end-of-year statement is issued by Revenue, which is normally around the middle of January the following year. Refunds are repaid to each person in proportion to the amount of tax each of you paid. If you wish to review your year of marriage, you can use myAccount and submit a request via My Inquiries. Before I give you an example, I would like to ask you to subscribe to this channel in order that we may be able to continue to make and provide you with up-to-date material relating to pay, income tax, tax credits, statutory annual leave and public holiday entitlements, how to complete your income tax returns, and many more helpful guides. Subscribing will cost you nothing. Now for the example. Tom and Mary married on the 10th of July 2023. They continue to be taxed as single people for 2023. As single people, they pay a total of €10,640 in income tax for the year. Tom paid €9,140 and Mary paid €1,500. If they had been jointly assessed, they would have paid €8,840. The difference between the two amounts is €1,800. As they were married for 6 months of the year, a refund of €900 is available. That's €1,800 divided by 12 and multiplied by 6. In the years following the marriage, there are 3 options for calculating tax for you and your spouse. These options are joint assessment, separate assessment, and separate treatment. You may choose the option best suited to you as a couple. You can choose to continue being assessed as 2 single people or opt for separate assessment, which is slightly different in that some credits are shared between both spouses. You can go for joint assessment, where tax credits and standard rate cut-off points are allocated according to the circumstances of your joint income. For payroll matters in Ireland, joint assessment is always more beneficial if one spouse is on higher rate tax and the other on a low rate tax. So one is on the 40% and one is on the 20%. In terms of which to choose, it does depend on your income brackets. The way to save income tax as a working married couple is to reduce the amount of tax at the higher rate. When both spouses are working, the standard rate cut-off is 80,000 for 2023, above which the higher rate of 40% is payable. For a married couple with one income, the standard rate cut-off applicable is 49,000 for 2023, above which the higher rate of 40% is charged. Joint assessment is the option that benefits most couples for payroll matters in Ireland. Under joint assessment, you are chargeable to tax on your combined total income. In the case where both spouses are earning in excess of 40,000 for 2023, which by the way is rising to 42,000 for 2024, it makes no difference financially whether they are jointly assessed or separately assessed. However, if during the year one spouse decides to reduce their hours or take job sharing, etc., and their income falls below the 40% threshold of 42,000 for 2024, under joint assessment, one spouse can transfer credits to the other to reduce the other spouse's tax at 40%. Couples can never be worse off financially with joint assessment. In 2024, the standard rate cut-off point for a married couple or civil partners is 51,000 if both are working. This amount is increased by the lower of the income of the lower earner, 33,000. This means that one person can have a cut-off point of up to 51,000 and the other person can have a cut-off point of up to 33,000 euro. Take an example where one person is earning 55,000 euro and their spouse is earning 35,000 euro. Standard rate cut-off point for the couple is 51,000 euro plus an increase of 33,000 euro. The increase in the standard rate band is not transferable between spouses. So the tax bands for 2024 would be 51,000 at 20% is equal to 10,200 and 4,000 at 40% is equal to 1,600 for the first spouse. 33,000 at 20% is equal to 6,600 and 2,000 at 40% is equal to 800 for the second spouse. Joint assessment is the option that benefits most couples. Under joint assessment, you are chargeable to tax on your combined total income. This is the option that is applied when you notify revenue that you are married or in a civil partnership. This does not prevent you from choosing the other options of separate assessment or separate treatment. You can update your civil status and request joint assessment through Manage My Record or My Profile in My Account. You can also upload any supporting documentation on the tab Manage My Record on the Upload Supporting Documentation screen. As I have mentioned earlier, your spouse will be required to confirm the request by signing into My Account and confirming the status update. Thank you. On my next video in this series, I'll be discussing how you can allocate tax credits, reliefs, and tax bands. Thank you.